How to maximize returns with effective stock investments. Learn from Sbimf. The first step to making money is to sign up in Sbimf for an investment account similar to traditional bank accounts. Is that really doable? Can you maximize returns with effective stock investments? Considering the volatile nature of the stock exchange, it's understandable if you're unsure about investing your money. However, you can leverage this investment option with the right strategies to build long-term wealth. Yes, the risk factor is very real. But you can balance it by using these approaches. Read ahead to understand what they are. Sign up for an investment account. The first step to making money is to sign up for an investment account similar to traditional bank accounts. You'll transfer funds into this account to purchase and sell shares and stock. Investment accounts can be of different types and are essentially brokerage accounts. Your interest, dividends, and profits are taxable according to your applicable tax bracket. Other than conventional investment accounts, you also have the option of retirement, kids, education, and disability accounts, depending on your needs. Identify viable companies and purchase stock. Now that you're ready to start investing, you'll scout around the market and research for viable stocks with excellent metrics that have the potential to earn rich returns. Working with an expert advisor or consultant is always preferable because they can provide expert guidance on the best options. For instance, they'll recommend purchasing individual stocks like Tesla 2X ETF, Vanguard Total International Stock ETF, VXUS, Vanguard FTSE All World XUS ETF, VEU, and iShares Core MSCI Total International Stock ETF, IXUS. Investing in index funds is the best option for investors dipping their toes in the stock exchange for the first time. Identify the appropriate entry and exit points. Identifying the appropriate times to purchase and sell stocks can make the ultimate difference in maximizing your returns. You can leverage the technical analysis tools available in your investment account for guidance. These tools can also help you evaluate the available stocks and pick options with a high potential for growth and maximizing returns. Different analytical models should also be studied to identify the right time to make a purchase. For instance, moving averages, relative strength indices, RSI, trend lines, and candlestick patterns. Understand the stock's support and resistance. An essential factor to remember is that every stock has various support and opposition levels. The support level is the price range below which the stock's value will not drop. On the other hand, the resistance level is the price range above which the stock value cannot climb. You'll leverage the support and opposition data when evaluating a particular stock for maximum return potential. As a result, you'll purchase the stock when it reaches its support level and exit the investment at its resistance level. That's how you can hope to maximize returns with effective stock investments. Investing in Systematic Investment Plans, SIP. Using the Systematic Investment Plans, SIP method, you won't have to worry about studying the market or identifying stocks with good potential. Nor will you have to worry about timing the purchase and sale for maximum gains. With SIPs, you'll simply continue investing a specific amount of money in the asset over an extended period. Typically, investors divert funds into a mutual fund or blue-chip company. Consistent averages will bring down the total cost of your investment and earn you the highest returns possible. Treat your stock investment as a fixed deposit. As expert investment advisors will recommend, adopting the long-term holding approach is the most effective strategy for maximizing your returns. Despite the volatility of the share market, its long-term prospects are always positive. With this premise in mind, you'll treat your stock purchase as a fixed deposit investment with a minimum holding period of 5 years and above. Ignore the vagaries of the market and its ups and downs. Buying, holding, and riding out the market's day-to-day volatility is advisable unless you intend to play the market with a day trading approach. Put together a diverse portfolio. The adage "never put all your eggs in one basket" absolutely holds true here. Savvy investors never divert all their funds into a single option, but pick a diverse range of stocks for investment. This approach allows you to offset some of the risks. For instance, choose a selection of gold mine industries with high growth potential, like FMCG, IT, EdTech, life sciences, pharmaceuticals, oil and gas, renewable energy, and the circular economy. You could also consider investing funds into bonds, real estate investment trusts, REIT, or other options that can potentially earn high returns. Learning the ideal strategies for maximizing returns with effective stock investments can be tricky. A better option is to work with expert consultants and advisors with a successful track record guiding investors. Not only can you leverage their expertise, but you can also deploy the various tools and software they have available to guide your decision-making. Making informed choices always helps you pick viable investment options to earn the most returns possible. Disclaimer: the opinions expressed in this article are those of the author and do not necessarily reflect the views or positions of KISS PR or its partners. This content is provided for informational purposes only and should not be construed as legal, financial, or professional advice. KISS PR makes no representations as to the accuracy, completeness, correctness, suitability, or validity of any information in this article and will not be liable for any errors, omissions, or delays in this information or any losses, injuries, or damages arising from its display or use. All information is provided on an as-is basis.